This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, November 26, 2014. Euro dollar. So we've seen a bit of a push higher in the euro over the past few sessions after the market stalled just shy of the 2014 lows at 123.58. But ultimately, any rallies are considered to be corrective while the market holds below the 50-day moving average, with deeper setbacks sought below 123.58 and towards the 2012 base at 2040. Sterling dollar. Cable has been locked within a consolidation over the past several sessions since breaking to a fresh 2014 low at 155.90 on the 19th of November. But a break and close back above 157.38 would open the door for a more significant correction up towards 159.45. Inability to close above 157.38 would keep the immediate pressure on the downside for a retest of 155.90, below which would expose a fresh downside extension into the 15300 area. Dollar yen. Dollar yen is in the process of a correction following recent 7-year highs established last week just shy of 119. A break below 116.80 would do a good job of triggering the onset of a more significant correction, which would expose 115.45 and 113.86 further down. But ultimately, any setbacks should be limited to the 11300 area, with the market looking to carve a medium-term higher low ahead of the next major upside extension back above 119 and towards 120 and then further up. Euro Swiss. Euro Swiss has been establishing a bit of an uptrend over the past several sessions, but after stalling out just shy of critical psychological barriers at 120. But this short-term recovery is not really doing anything to take the immediate pressure off the downside, and a break above 120.45, the previous September base, would be required to officially take that pressure off the downside and suggest that the market is putting in a legitimate base. Aussie dollar. Aussie dollar recently broke down to another 2014 low on Tuesday, with the market taking out the previous low at 85.41. This sets up the next major downside extension over the coming weeks towards next key resistance, a measured move objective in the 8100 area. Ultimately, only back above 89.11, that's the high that we saw on the 29th of October, would compromise the bearish outlook. Dollar CAD. Dollar CAD is in the process of correcting since establishing recent 2014 highs at 14.67. The market is now looking for the next higher low, ideally somewhere above 11.22, in favor of the next upside extension beyond 14.67 and into a measured move objective around the 117 area. Only a break back below 11.22 would compromise the current bullish outlook. Kiwi dollar. Kiwi has mostly been locked within a consolidation over the past couple of months, with the market being defined between roughly 80 and 76 below. But we did see a 76.60 2014 low that was set on the 7th of November, and this does indicate that the market still is looking to head lower over the medium term. A break below 76.60 would open the door for the fresh downside extension into the 7300s, while only back above 80.35 would compromise the current bearish outlook. SPX 500. The S&P 500 has rallied to yet another record high, breaking up to 2075 on Tuesday, and the market could be poised for additional gains towards 2100, which becomes the next significant psychological barrier above. But given the intensity of the move that we've seen since October 15th, there is risk for some form of a short-term pullback. 2052, the low that we saw on the 21st of November, is the key level to watch below, with a break to trigger this correction and expose 2030 and 2002 further down. Gold. Gold is in the process of recovery off the recent 4-year lows at 11.31 and has been consolidating around 1200 over the past several sessions. The market is looking to maybe consider a break above recent highs at 12.08, with a break to expose a move up towards 12.30. But ultimately, only a break back above 12.56 would compromise the bearish outlook, with a lower top favored towards a retest of the recent 2014 low and 4-year low at 11.31. That's all for today. Have a good one.